Brian, same question for you. Has the stock market priced in the possible end of QE? And since Kathleen raised the issue of bubbles, and we do see the stock market hit record after record, is there risk looking ahead?
I will take the opposite side of this as Kathleen took, because I believe that both the fixed income and the stock market have fully priced in the Fed's ending of quantitative easing. In the last policy statement, the Federal Reserve made it very clear that if things continue as they project that they will wrap it up after the end of their October meeting. If you look at things like the federal funds futures market, where you can get the market implied consensus as to where it is or when the Fed might raise rates, it looks like the first move might come towards the end of the first quarter or sometime in the second quarter of 2015. So I think it's actually a bit of a stretch to say that the market doesn't have this priced in, because market prices do reflect it, and the Federal Reserve has been very transparent about what they plan on doing. If there are any bubbles, I think that it's more along the lines of what the great singer Don Ho would have said, that these are tiny bubbles, perhaps in the leveraged loan market, perhaps in some parts of the equity market, but it's nothing that's actually of systemic or system-wide importance yet.
So in terms of rate hikes, how will the market behave differently? Brian, I'll start with you and then we'll go to Kathleen. Once we actually see rate hikes happening, and we're not just talking about it and pricing it in, when it's actually said and done, what happens then?
It's all about the communication strategy. If you compare what the Fed did in 1994 to 2004, last two times that the Fed raised rates, very different market responses. 1994, the Fed raised rates. Nobody really knew why they were doing it or for how long. It was very abrupt, and they were occasionally raising by 25 basis points, then 75. But in 2004, they were much more transparent and much more gradual, and the market responded in a much more favorable way. I think that when the Fed comes around to raising rates, it's all about what are they saying and how are they doing it. And the Fed is really setting us up here where they're raising rates in a very measured and gradual way. It's going to be very transparent, which is why I'm not that worried about it.